The big bank earnings delivering strong results with profits soaring across the sector. Let's get more with Bloomberg Intelligence senior bank analyst Herman Chan. They soared across the board. JPM quarterly profit up nearly 41%. Goldman is up 80%, its best quarter in 5 years. Citi posts the highest quarterly revenue in a decade. The numbers are staggering, but are they repeatable, Herman?
That is going to be the question of the day. We're seeing that particular question asked from the analysts on the calls already, and at the JPM call in particular, that question was posed. The bank itself said that equity trading results probably you shouldn't expect that to be repeated in the third quarter. But on the other hand, this positive backdrop that we're seeing in trading is sustainable.
So where is the competition most fierce?
Yes, it's most fierce really on the equity trading front, where you're seeing the U.S. companies really dominate. But on the other hand, the European banks are coming back, and you see that as they re-engage. And we'll see more of that with earnings from the European banks next week. But we're expecting to see really strong results all across the board, particularly in equity trading.
We also saw expenses move higher for JPM, and maybe that accounted for some of the initial jitters in the stock, although it is decisively higher this morning. When it comes to the expenses, there had been this idea that you incorporate AI, you get a more productive workforce. Maybe you don't even need to grow your workforce as much.
Right.
Is that narrative on pause? Is it turned on its head? Why the higher expenses?
It's happening over the longer term, and you're seeing banks talk about extracting some benefits from AI, particularly in areas like the call center or areas like fraud and mitigating fraud loss. That being said, we just talked about the banks hitting it out of the park on the trading side and investment banking. These banks have to pay their employees and their bankers and traders. So the reason why we're seeing a higher expense level is because of the strong revenue backdrop, which in our view are really good expenses.
When Diamond says that he sees, several risks shifting below the surface like tectonic plates.
Right.
What did the analysts get him to say in terms of color on that? What are these tectonic plates?
He's always been a bit guarded with his outlook for the bank and the industry, and that really reflects some of the geopolitical tensions that we've seen in Ukraine and also in the Middle East. He's also talking about potentially stickier inflation and also the elevated trading results that potentially could not be as sustainable.
But he makes it sound
term.
like any of those could turn into a real crisis for the market, and we've proven time and time again over the last few months that none of these things is turning into a crisis.
I think that's right. So over the short term, all of these positive, constructive areas that we've just talked about could be sustainable. That being said, the bank is a very risk-averse institution, so they're always looking at the potential issues around the corner that a lot of others may not see. So I think that just speaks to the fact that he's a very conservative person in general, and his comments really reflect that.
All right, Herman, thank you so much for joining us. Herman Chan.